What is going on, everybody? Welcome back to another video, and in this video we're going to go over 6 stocks that just raised their dividend income just for you and the investors. So with that being said, let's jump right into these. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long term, short term, just in finance and everything like that. So with that being said, let's jump back to the video. Number 1 up on our list today is AOS, also known as A.O. Smith Corporation. This one is actually a water filtration system, and they actually increased their dividend by 7.7%. And you guys got to remember, we don't only look at the dividend income. We also, and this one's a quarterly, I believe, let me make sure on this one. Yes, it is quarterly. So that's a little bit different from what I normally put on here. I put a lot of monthly stocks on here. A lot of people seem to like them, and I like them too. I like that monthly income. But when it comes down to AOS, this is actually a really good company. The other thing that we like to always look for is capital appreciation, or at least worst case scenario, if you were looking at like a QILD or other monthly dividend stocks that we have talked to about in the past that are mainly for that monthly income, is things that are not going down in value steadily. We want something that's either going to slowly appreciate or has good growth, plus is increasing their dividends in order for it to go into my portfolio. And this one actually is going to fit it. A.O. Smith is actually really good. I'm going to be looking to add this one into my portfolio a little bit more. I do not currently own this one, but it is actually a really good stock now that I've been digging deeper and deeper into this one. So again, a 7.7% increase on their dividend. So you go from getting 24 cents a month or 24 cents quarterly to 28 cents, or 26 to 28 cents. So that is pretty good. You can see based on the past, they do pay their dividend quite well. So that's always a good thing. On to the next one. So your next one in this video is going to be HON. And this is also Honeywell. So a lot of people are actually going to know this one a lot more than what they would ever think. And that's always a good thing, of course. You want to make sure, you don't want to be buying companies that you've absolutely never heard of, or you can't do enough research on them to get enough of it, to know whether you want to buy this stock or not. This one has went up 5.4%. And again, this one is a little bit of a pricey stock. We've went over this in other videos where you want that ratio to be okay. Now the dividend yield is under 2% still completely of the actual stock. Again, when we come back to this, you don't want to just look at that yearly. You want to be looking at the max. And they have grown tremendously over the past about 5-10 years, which is always a good thing. We want to see if they're going to continue to grow. Now, the one thing I will always say, and add this into my portfolio when I'm doing videos and doing updates, is when people start asking me and other investors that I know, what should they be buying, when it's people that never buy stocks, they never invest, they never do anything, they have a 401k, they put money into it, they never even ask another question because the market's been so hot, that should be a warning sign. But I'm going to leave it at that, and we're going to jump into this next one, which is PSX. Not many people probably actually know that symbol, but they all know the company. Phillips 66, if you've ever went to a gas station or no gas stations, Phillips 66 are everywhere. This one, I would not be inclined to buy. Again, I'm not a financial advisor whatsoever, anything like that. I don't like the depreciation of the actual stock. Now, I'm sure that there are things that people are thinking, well, that's the best time to buy. You look at year to date, and it's not great, it's not bad, it's not great. You guys got to remember that. $81.22. This one's just, if you look at the overall chart of this thing over the past 4 or 5 years, it's crazy. I'm not looking at this one, but they did increase their dividend by 2.2%. Again, not one that I would be looking at. So just because they raised their dividend does not mean it's something that you should absolutely be like, hey, I need to go buy this stock. Don't get caught up in that. Make sure you know what you're looking at. And we're just making it very simple. RPM. Now this is one that not a lot of people are going to know at all. Again, so when it comes down to this, make sure you do your actual research. Now this one is down at 6.77%, for the year, and Max overall has been quite well though, and that's the difference. I think right now while everything else is actually up in the market, RPM just increased its dividend by 5.3%, which I think is second or third in line on this list for the increase of the dividend, which is great. It's only $83.49. Now it's going to pay quarterly again, so all you monthly dividend people, I'm sorry, these are all going to pay quarterly. But I'm saving the best one for last. Remember that the best stock that I am going to personally start buying a little bit more of will be coming at the very, very end. Now, RPM is not a bad company whatsoever. You can go through and read what other people think on here. I don't care to do that. I want to know the dividend. I want to know the business side of it. And then I want to know that my overall capital is not just getting down. Who cares if I'm getting more of a dividend if my capital is just getting destroyed on the downside? It's got to at least equate itself out of there. But again, this is not one that I'm probably going to be investing in myself. But this is one that is going to give you that income that's going to continue to go up. Now, I do think that they will continue to increase their dividend as well. Right now, again, just a sketchy spot. So, if you have your one or two stocks that you continue to buy during the market, absolutely go and buy those. But we're going to move on to the next one, which is THO, also known as Thor Industries. Now, I know some of you that have been looking for stocks have probably heard of this one. I know I've heard of this one multiple times. Now, they have increased their dividend by 4.9%. Now, again, the lowest one we've had is 2.2%, which isn't great. But RPM was good at 5.3%. Thor here at 4.9%. Which is a good one. And again, we want to go over and look at the max of this chart. And obviously, everybody took a beating during 2020. This is not a one that I'm all so proud of that I would be buying. I've heard of this company multiple times. I actually do not even know what they do. So, not one that I would be buying, but they did increase their dividend by 4.9%. So, this one might be one that I need to do some more digging into to figure out if we actually should go into. And when you see this 5% here, just know it's 4.9. They're rounding up just to make the title look better. And then my last and my favorite one that increased their dividend, and they actually increased their dividend quite a bit. Everybody has heard of this. If you have ears and you're not deaf and you can actually listen to videos, you've heard of this company. Whether you've ever even looked at a stock or not, Starbucks. Now, Starbucks obviously has done extremely well since 2009. They've done nothing but just continue to go up. They're on every corner of any city, and they're a little expensive. I'm not gonna lie. I mean, I've seen people pay $5-6 for a coffee or for special drinks, whatever the case may be. But they also just increased their dividend by 8.9%. Now that is a big move, and I want to go into this one a little bit more because I like this company. I do not personally go and buy a $9 coffee ever, or even a $5 coffee, unless I'm on vacation and my girlfriend wants one. That's the only way. Now remember, they're a little bit pricier too, coming in at $111. But your quarterly dividend is almost 50 cents now. And on top of that, that's a 2% return on top of, now this one is more of those growth stocks. You're talking about Apple, you're talking about Amazon, Microsoft, all those things. Starbucks is just in the food industry or food and beverage industry, coffee mainly, it seems like. And they've killed the game. You cannot tell me anybody that's never heard of the brand Starbucks or the store Starbucks. Done incredible. Obviously, you can see it has potential for growth still. Now, again, when it comes down to these and you see these that have had these exponential growth over the past 5 to 10 years, you kind of get a little bit worried. Maybe are they going to continue to grow? I think that's happening with the overall market right now. We had that huge dip with coronavirus and everything, and now it is all cranked back up to all-time highs. That's for you to choose. Again, lately I have been basically buying just income stocks that are pretty safe. They fluctuate a little bit, but even when there's a crash, they don't absolutely kill me, and I do like those. I have not been investing into growth stocks. Starbucks, though, I will probably be buying shares on some red days. Again, guys, do not be scared on red days to buy. And I know it always looks better on a green day, but it actually ends up looking even better if you buy on a red day normally. So with that being said, thank you guys for watching this video. I hope somebody got something out of this video and I was able to help you. If not, leave a comment below and say I suck. I don't take it personally whatsoever, and I will get better. That being said, I will see you guys in the next video.